Good evening, good people. Thank you so much for joining us today. My name is Sam Chalo here today, your host. And before we begin, let's start with a word of prayer. Thank you, Lord, for having us here today. I pray that we have a very engaging and interactive session throughout this night, and we learn from each other. In Jesus' name, I do pray. Amen. Thank you so much, everyone, for joining us. Today, it's going to be a very, very exciting session, and I hope you are ready as I am. And I am not alone today. I am joined by a guest today. His name is Gabriel. I'll tell you more about him later on, and he'll also introduce himself. But today we are talking about asset classes, and I hope you're ready for this engaging session. Please drop a fire emoji in the comment section if you've joined us. Also, you can tell us where you're watching us from, your name and where you're watching us from. Drop a fire emoji in the comment section so that I can start. I can shout you out, and also we can get our keyboards warm. Yeah, it's gonna be a very engaging session. It's gonna be a very engaging session, and you are going to like this. And it's gonna be very. I hope you can also hear me. So if you're getting me loud and clear, please let me know in the comment section and drop the fire emoji. Tell us where you're watching from, and let's get this started. And I hope your keyboards are ready. If you've not invited anybody in the session today, please invite them. I guarantee you this is going to be a very, very, very engaging session, and you better be ready for this. You better be ready for this. So in the comment section, tell us where you're watching from. Let me know if you can get me loud and clear, and we are going to get started. And as we begin the session, I'd like to also have a segue in this session today. So I can see your comments. Yeah, I like to see your comments. If you're Savorite, please drop your comment section. Drop your name in the comment section and where you're watching us from, and the fire emoji. Please get your keyboards warm. Get your keyboards warm, and let's begin this session with a lot of fire. Let me know if you're getting me loud and clear. Let's get your keyboards warm. And today I would really like to introduce the team that we have behind the scenes. So allow me to be the man behind the camera today. So just a minute. I think I'll be introducing the man himself, Mr. Ben Migwi. He's the one behind the camera. He's also the one controlling all the graphics that you see down there, and our director today. And we also have Sia Njoka here. Please say hi to people. She's the moderator. All the comments, any comments you can see by TSAVO, she's the one here. And I hope your comments are coming in. Yeah, so I hope your comments are coming in. As you can see, she's ready to moderate and ready to talk to you guys. That's Sia, and the man behind the camera himself, Mr. Ryan. So he's the cameraman. We also have some Savorites in the building. I never told them, but let me just put them on screen today. So this is Savorites doing whatever it takes to ensure you as investors get whatever you need from us. So you guys just wave to the camera. Go to, yeah. That's the finance team. That's the finance team there. So yeah, those are the people behind the camera, behind the scenes, and also here in the office. So allow me to take my seat, and we can get the session started today. Let me see if you have any comments today. So I see Jack Njiru, Eunice Washira, Edwin Amolo, David Mushai, Betty A, James Mburu. Thank you so much, everyone, for joining us. It's gonna be an engaging session, and I hope you can hear us loud and clear. You're getting me. I can see Jackie fire emoji. Edwin Amolo saying from Bomet. Thank you so much, Edwin, for listening in. I'm really glad that you're in here. I can also see Betty A in London getting you loud and clear. We are traversing borders with this live session, trying to lead the fire movement out here. Please keep dropping your names in the comment section. Thank you so much. Mubarak says they're locked in, getting me loud and clear. Thank you, James, for joining, and for every repeat Savorite, drop a fire emoji so that you can get the session started today. So please let me know once the cameras are back live, and then we can get this started. You're good to go? Awesome. Thank you so much. Let me see if there are more comments. Ken or you are locked in. Thank you so much, Ken, for joining. It's going to be a very engaging session, so we hope everyone is ready and your keyboards are ready as you are. So allow me to get started in the session today. I've kept Gabriel here waiting and silent for a minute, so let's get it started. So you guys know that as TSAVO, we exist to enable you achieve financial independence. Yeah, that's our purpose. We exist to enable you achieve financial independence through affordable, amazing apartments. Yeah. So what is financial independence? Financial independence is having assets that generate sufficient monthly passive cash flows. And today's topic is about assets and asset classes, and that's why we have an expert in the building to help us talk about that. And we believe also we could be the best in the world at leading the FIRE movement. Yeah. And that's why we do this session, so that we can lead this FIRE movement and spread the fire. And I hope you guys are also spreading and inviting other people. Please bring in more people to the live stream, invite more people so that we can learn together. And allow me to also define what our paradigm to investment is. And if you are not in last week's session, the previous session, which is the other week, we were talking about starting with why. Yeah, so how we advise people to start their journey is you first start with the why, and then after that select assets that enable you that will enable you achieve that why. Yeah, so select assets with features that will enable you achieve that why, and that is going to be our topic today, and that's why Gabriel is here. And let me introduce him. So Gabriel is a TSAVOite. Gabriel is a financial analyst, also a lecturer. Cool story here. He's a lecturer of one of the TSAVOites in-house, one of the people in our finance team, one of the people handling accounts receivable in our team, and that's how we got to know TSAVO as well. He's a certified trustee, also pursuing CFA, and also just gotten to learn that he's a Toastmaster. Yeah, so those are the many credentials I could talk about him, but I'll also allow him to introduce himself for a minute or two.
Thank you very much, Sam. It is a pleasing pleasure to be on this session today. I look forward to having a great time together and learn. Learning never ends.
Awesome. Thank you so much. Let me see if we have more comments. Lea Stella is locked in, looking forward to learn a lot. You better be. Ombui Kabecha from Kiambu locked in. Thank you so much, Ombui, for logging in. It's gonna be a very engaging session. And before I also start, let me ask Gabriel here, what's your favorite music genre?
Reggae music.
You're kidding?
Yeah.
No. So that's Gabriel likes reggae music. I also love reggae music. If you can also let us know what your favorite music genre is in the comment section. We'd really love to hear. But allow us to now get into the meat of this topic today. Allow us to get into the meat of what you're here to talk about today, and asset classes. But before we get there, what are assets? So here we get started.
Wow.
Yes.
So if we were to talk about assets and remove the accounting bit of it, yes. Assets can just be defined as what you own, what really is yours, and what brings money to you. So that is a definition by Robert Kiyosaki. And many people get it wrong. You could have an asset that takes money away from you. So that is really not an asset, it is a liability. So in simple terms, I would say an asset is something that will bring cash flow to you, make you richer, make you awesome.
Yeah. So assets, I think, simply put, puts money in your pocket.
Yes.
Liability takes money away. And what are asset classes?
So when we look at assets, they take different shapes and forms. And like a meal, it needs to be balanced. You can't really eat carbohydrates alone. You need proteins.
Yes.
So even in in assets, we have different types of asset classes.
Yes.
So basically, that's what we'll be discussing today. And we'll be looking at what are carbohydrates, what are proteins, what are fruits in this study called. Yeah. And basically, we are all working towards becoming financially independent. And for you to do that, you need a portfolio. And in that bag, what you're calling a portfolio, which is a bag, it needs to have a couple of things. And basically, those are, in that bag, what is contained in that bag is what we'll be discussing as asset classes.
I like the analogy Gabriel has used here, and I can see Betty saying reggae is also good. Betty A likes reggae, so shout out to you, Betty. Masitsa logged in from the Ndegwa, Karibu Sana, home ground Dio Hapa. Mumbi Ann from FMC, looking forward to learning a lot. I was with Mumbi today. Thank you so much for joining. You're a loyal one. Thank you so much.
Thumbs up.
Yeah. So getting now into the asset classes, into this pudding, of assets that are out here. I think I like the way you've mentioned financial independence, and we, like I said as we began, we define financial independence as having assets that generate for you sufficient monthly passive cash flow to finance your needs, wants, and desires. And as much as asset classes by themselves are also groupings, I would, to make it easier for us to understand and to make it easier for us to be able to just grasp this topic easier, I would like us to classify them into two.
Yes.
Yeah.
Yes.
Cash and cash-like assets. Yeah. And now also cash-generating assets. Yeah. Cash and cash-like assets and cash-generating assets. So that is how we'll be grouping these assets today. If you have a notebook, it's time to learn. Yeah. I know. A lot of us have been trying to see where we can put our money in, and today is the day to learn. Today is the day that you are going to be learning all these asset classes that are here, because it does really get confusing, and when you do not have the knowledge, it's really, really hard to make your choice, when you do not have the knowledge, it's very, very hard to make the choice, and we are here to enable you make the right choice, make the right investment choice to enable you achieve financial independence, so those are the asset classes that we'll be diving into today, and get your notebook if you're gonna be writing down anything, and I'll let Gabriel now dive us into the cash-like asset or cash equivalent assets. Yeah,
and that's a fantastic place to begin, because how many of us love money, have some cash in our pocket?
Yeah.
I was just looking at my pocket and I have some cash.
Oh. You do?
I actually don't have cash, but I have cash in my M-Pesa. Yeah. So definitely, yes. We all, when we start talking about cash and cash equivalent, the first thing that we talk about is cash. So this can be cash at hand, the one that you will go to the shop and use, or it could be cash at bank. So basically it's chilling there, waiting for the day you'll go and withdraw and utilize it. So basically this is money you've put for liquidity purposes to meet your day-to-day expenses. So basically you want to have cash that is sufficient to run you through all your endeavors and activities in life, right? We say money is the oil that lubricates the journey of life. Yes. So definitely you want to have a bit of that cash, right? So this cash, when you have it, as I've said, it gives you liquidity, and then it gives you the flexibility. This is the money that you'll use over the weekend to go bowling, right? Yeah, this is the money that you'll use to hang out, buy a few things here and there. The disadvantage of having so much cash is it doesn't earn you any return. So it is basically sitting somewhere, and in a financial knowledge, you'll say it is eroding in value. So if you had 10,000 shillings somewhere and you keep it there doing nothing, in 10 years time, what you would use that 10,000 to do won't be enough. So a few years ago, Sam, if you had 1,000 bob and you walk into a supermarket, you leave with a whole jerry can of goods. Today, you'll be fortunate. Not so much. Not so much. So having so much cash won't really help you. So you want to then move to the next level of saying, what are other cash equivalent assets, classes that I can put my money in, still maintain its accessibility, but again, earn a bit of interest on it. So the first cash equivalent is you could probably put this money in your mutual funds. And the one that many people talk about a lot is money markets.
That's very true. They've become very popular of late in Kenya.
Very popular, really.
Yeah, they've become very popular.
And I think the reason is because when COVID came, and people, because of one reason or the other, we were not having any more money coming in. And the discussion about emergency funds started coming up. That, you know what, things can happen, and probably you will not have any fallback plan. And somebody used a very nice analogy that I loved, that these cash equivalents are like your emergency exit in a car. So when there is an emergency, you hit that and you exit using that emergency route. Unfortunately, is many of us get caught into when your car has had a puncture. Do you use your emergency exit? Would you? If it has run out of fuel, would you kick your emergency?
Not really.
So people, at times we get, you have an urge to buy pizza, and then you go and use your exit route. So you want to go on holiday. You had not even saved for it.
Yeah.
You go and take your savings that you had saved rainy day, and you utilize them for that purpose. And even worse is, so once you have, well, when a car, you've used the exit route, do you ever see a car on the road without the windscreen, the back emergency route?
They all have it.
They all have it.
Yeah.
So what happens is you go and fix it before you go back to the road. How many of us go back to fix it? So most of the time, we spend our emergency funds and never go back to fixing it. Voila, COVID happens and you realize, boom, I needed it.
Yes.
I needed that umbrella.
Yes. Let me give you a story of my own on the same. As I was trying to find my way around investments, I started off with that. If you've been here in this session, I think you've known my story. I paid off my debt and then now started to look for places I could, or assets I could put my money in. So I procrastinated by saying, let me save and then learn about asset classes. As I learn, let me just save so that once I get the asset that I want, I'll put all that money in there. Yes. What ended up happening is I was breaking my my emergency exit for things like, let me buy a shoe here, let me buy something here and there, and I think I can totally resonate with that. And let me please just open up in the comment section. And thank you, Godfrey, Jimmy, and Diana, for joining in. Insightful discussion. Godfrey is listening from Muranga. Thank you so much, everyone, for joining. Let me let Gabriel go on with the conversation. And
you've brought in a very interesting concept that mutual funds are where you want to get started with investing. So most of the time is, as you think through an idea, you would want to keep this money at a place where it is earning you a bit of a reasonable interest. Better than having that money sitting in your bank account. Banks are in business and they are very mean with their interest, all right? So they'll be giving you next to negligible nothing. But if you're significant like you, Sam, you can go and negotiate a better interest. But most of the time, they'll give you nothing. So you would rather put that money in a money market. It will earn you about 8 or rather 8% in the market. And then now once you have your idea, you can now take the money and deploy it. So there are other mutual funds. You could also have equity funds. So equity funds is basically, yes, it's still accessible, but now it's taking a bit of a risky approach. It is investing in stock market, but now you're not involved. Somebody does it for you. They could also invest in fixed income. So you could get a fixed income fund. So basically they take your money and they are actually called collective investment instrument. So they bring money from a couple of us, all right? So they give you access to otherwise inaccessible investment. And what that basically means, with your 5,000, probably you'll not be able to invest in a particular bond, right? But then with that 5,000, they can pool, right? Pool a couple of those, and then we have $1 million, and then we invest in in the bond market, all right? So those basically are your cash equivalent. In accounts, they will talk about receivables, right? As your cash equivalent, because you can liquidate them. Your stock, really, because you can sell it. So, but in our reality, in our financial independence journey, then we're looking at where can we put our money that it is accessible, so that then again you don't sleep hungry and you're rich. Exactly. It doesn't really make good sense, right? All right.
Thank you for that. Just to sort of summarize, this cash and cash equivalent asset classes are more about accessibility and liquidity.
Yes.
Me being able to access that money if when I want it, or more so faster.
Yes.
And it's like cash at hand at in the bank, or I could put it now in the mutual funds that something like money markets and or these fund managers who collect people together and invest in things that the kidogo money could not be able to invest in, right?
Yes.
Awesome. I hope you're learning something. Viola Natalie here says insightful. Peter Kinyanjui throws a dub. Thank you so much. Please drop a fire emoji if you're joining in. Today we are talking about asset classes, and we've just discussed cash and cash equivalent assets. And I hope you guys are learning. And we are now going to cash generating assets. My name is Sam Chalo. I'm joined here by Gabriel, financial analyst. So it's going to be a very engaging session. Please let us know if you're learning, and if you have any questions, please drop them. Gabriel will be ready to answer for you as we go on. So I think now Gabriel can dive into cash generating assets. And please take your time.
Thank you very much. Please, those questions, keep them coming. Make them as hard. Some will help us.
They better be. Yeah.
All right. Now on cash generating, right? So we basically are looking at how do you then invest in assets that generate for you an income? Because then in the long run, after it's all said and done, you need to grow wealth. So it doesn't happen with wishing that I had more money. It happens when you're intentional about, let me look for an avenue where I can put my money in a way that then grows, right? You plant a seed and you want to see that seed grow, right? So there are various asset classes that we are in cash generating category. And the first one we'll start with is the fixed income, or commonly known as your bond market, right? So here basically, let me not say it now, but people consider it is a passive approach to investing. They say investing for the lazy.
I never had that.
You actually don't do so much work here because you're investing in the government bond issues, or there are corporations that I know that are offering corporate bonds, right? So the reason why we call them fixed income is because they guarantee you a particular interest over the duration of time. That interest is commonly known as coupon. So that coupon could be coming in 6 months, in 1 year, depending on how that bond is structured. And then the beauty about this is it guarantees you income over that duration of time. So if you're investing for 10 years, you buy a 10-year bond. So what happens is you give them a lump sum of money, 100,000. Now you can even invest 50,000. You need to have an account with the central bank to do that. And then this money, over the duration of your investing, you'll be earning coupon. So that coupon will be a percentage of the amount you're putting in. So it is 10%. So it will be paying you 10% of that. Maybe if you've given in 100,000, 10% of your 100,000 will be coming in each year. And at the end of the 10 years, you get back your money. Really, it's good. You're eating your interest, right?
Yes.
So this is really good. And as you plan your retirement, really, this is one asset class that if you plan it properly, it will be giving you cash flow on a month-on-month basis, right? So if you have 12 bonds and each bond is paying you coupon on respective months, basically you've sorted your entire year. So this is one interesting asset class that you could invest in. It is not very technical, right? And then a part of it is tax efficient. So if you're investing in infrastructure, and tax efficient here is because we want to manage our taxes, right? So with infrastructure bond is you don't pay even tax. So it is tax exempt. And that is good for us as investors because you get all your money. In other investment asset classes, you'll get to pay taxes, all right? And then capital gain comes in as another benefit that you get in the bond market. That if the market interest rates are coming down and then the price of your bond goes up, and if you get to sell at that time, you get capital gain. You bought your bond at 100,000, but you can sell it at 100,050. You made an additional 50.
The price of the bond go up?
Interest rates movement. So when interest rates are moving down, basically what that says is if you are to invest in the market today, the rate of return you'll get is low. So I normally give a very simple example. So let's say we have 100 shillings, right? And we invested it in 2020 when the interest rate was 10%, right? And now we're in 2022, we still have our 100 shillings and interest rate has moved to 8%, right? So it ideally means if I have 100 shillings and I invest today, I'll be getting 8% return, right? So if you have a bond that pays me 10%, it is more valuable,
No, I get that.
literally.
I get that, yes,
so then if you sell in that circumstance, you gain. But now the flip side of it is interest rates move differently. So if interest rates tend to move up to 12%, so your bond becomes worthless. Because if I have my 100 shilling today, I can invest it and get 12% interest on it.
And so what is usually the pattern currently now in that market? Does it go up? Is it volatile?
It is just dynamic.
You
can, the analyst will sit and predict or give a perspective of where we are looking at interest rates moving. But again, sometimes it's erratic. COVID happens and all of a sudden interest rates come down. All right. So many factors will affect the interest rate movement. And from an analytical perspective, you watch the interest rate curve, right? Because it determines your investing, whether you'll go and buy more bonds or you'll be shedding off your bonds.
The bonds that you have.
Right, yes.
Okay, very well. Okay.
So we are good with bonds. So we've said the problem with bond is the interest can be little. And if you're young, it's not maybe really good for you, but it's good to have a portfolio in the side. But for older people, if you're in retirement planning, we tend to avoid investing in risky ventures. So your bond becomes secure, it's guaranteed, right? So with that component or structure, then it answers to a particular need of an older generation, people who are risk averse, who don't want to take much risk. You want to just have your cash in a way that it isn't much affected by the dynamics of life.
Yes, of
right?
life, exactly.
Yes.
Thank you for that.
We're good?
Yes, we're good.
We move on to equities.
Yes, we can.
Right. Now with equities, these ones are very fantastic. Now here, you're basically buying a part of a company, all right? So you want to be an owner, right? What is against your name? You know, some of us, beside our birth certificate, probably, and our high school certificates and school certificates, we probably don't have any other thing. So you want to be an owner. You want to own a part of a company. So equities allow you to do that in a way that there are two ways to it, maybe, and one of it is an ordinary shareholder. So basically you're buying stock of a company. And these are companies who are raising capital in a capital market. They are listed, they are regulated. They need to provide us with information to assess them. And basically here we are looking at the future of the company. So you analyze the fundamentals of the company. And once you're convinced that this is a rising star, this company is going to blow our minds, right? Then you buy them. Right now, because of the dynamics of our country, stock markets are coming down, and it is a good place for, if you have the nerves to get a bit of risk, this is the time to get in. Analysts will tell you.
Plummeted. They're dipping, and so buy the dip.
You buy the dip. In finance, we say you buy low sell. You buy low, sell high. Right? So you want to get when the curve is down there, buy as many as you can, buy as much as you can, and then sell them off when prices start going up. So with equities, as I've said, ordinary shareholder, so basically you'll be called for AGMs, the company are accountable to you, and of course it is the board who are running the organization, and they have a mandate of coming to tell us what is really happening in the organization. And there's a preferred shareholder. So with preferred shareholders, these ones are a notch higher than every one of us. So with equities, we said in fixed income we get coupon, right? In equities we get dividends, all right? So with ordinary shareholders, the company decide when to pay you dividend, right? So if the company has made profits, they can share part of that with you. And good companies should do that as often as possible. But again,
and it's at their own discretion.
At their own discretion, most of the time, at their own discretion. And it's they make decisions for the good of the company, because if the company continues to live on, then we will benefit. If it dies off by paying us dividend, then it won't really be at a plus. Preferred shareholders, on the other hand, they need to be paid, whether the organization is making money or not. We are guaranteed
preferred shareholders.
You need to be paid. So with that, and then again, with equities, the beauty of it is it's risky, but then you stand a chance of gaining a lot. If prices, and then you see the way companies' dynamics change.
Yes.
And a bit of it, if the company is strategic, a piece of information can transform everything.
Yes.
Everything.
Elon Musk decides to go on a podcast and smokes marijuana. Stocks plummet.
Boom, like that.
Yeah.
He says he wants to buy Twitter, and prices just change.
Just go up.
All right. So you can really be rich quick, but then you also stand a chance of being a poor quickly. Very fast. All right. So here you want to invest here when you're young. All right. When you have the ability to stomach those shocks. All right. And basically, to invest in equities, you don't even need so much money as people would think. You just need 100 shares of whatever company you're buying.
Do they have limits for each of the companies, or is it something set by the stock exchange?
Yeah, you just need 100. So 100 is good for a start. So if the stock is selling at 20 shillings, so you need 20 times 100, 2,000, and you're a shareholder in that company.
Yes.
And then you can buy as many as you basically can. So the minimum is 100, but then you don't have a maximum. And different companies have different stock prices. And so depending on their stock prices, your return also. There are companies that will sell their stock at 500 shillings, and then their return is also to the higher end. Those ones that are selling to 20 shillings, their dividends are also small, right?
And is this is what Warren Buffett has invested in?
Yes, for a very long time. Very long time. So the view, and from theoretically speaking, but also it has been proven that those who invest in equity over the long haul, they get to outdo all other portfolios.
Like holding.
Yes. If you're investing in equities consistently, consecutively, and you have the ability to withstand, that's why we are saying younger people, because then you have a very long life ahead of you. So basically what we are saying is, over that duration of time, a stock could go up, come down at some point, but again, it will come back up. Organizations can be said of Safaricom started at 5 shillings, went to 3 shillings, now it's at 29 shillings, right? So over the long haul, if you bought even 1,000 of them at 3 shillings, all right? Right now you're at 29,000.
Yes.
Right? So basically,
before I ask you a question, allow me to read a few comments here. I can see Muimi Mwando watching from Mombasa. Thank you so much, Muimi, for joining in. Masi Nakitare tuned in. Thank you so much, Masi, sorry. Let us know if you're learning something. If you have any questions for Gabriel and I, please drop them in the comment section. I can see Kawajiru joining in. Thank you so much for joining in. My name is Sam, Financial Independence Ambassador, and I'm joined here by Gabriel, a financial analyst, and today we are talking about asset classes and where you need to put your money in. So we've learned about the different asset classes, and we've grouped them into cash and cash equivalent assets. And here we have cash itself, money in the bank, money at hand, and also money invested in things like the mutual funds, like money markets and all that. And we've also now gotten into cash generating assets, where we've talked about fixed income, and this, you have things like bonds, bonds and T-bills here, and we are currently now in equities, talking about shares. And I have a question for Gabriel. If you have a question as well, please drop it in the comment section. Drop the fire emoji if you've just joined us as we continue this conversation. So my question is, when selecting shares, is it gut feeling? Is it, I think I like this company, I'm a fan of Apple, let me just buy Apple stock. I think from what I know, it's been one of the best performing stocks, and they don't pay dividends, or do they? I don't know, but it does. You do get a lot of capital gains on top of it. So how do you go about it?
Part of it is not so much of gut feeling, but if you love a company, you would love to invest with them. If you trust that company, you believe in their values, you believe that they are going to be here to change the world, then you want to invest in that. But over and above that, you want to know the company. And as I said, you want to understand the company fundamentals. And then from an analytical perspective, there are some ratios that we will calculate, dividend yield. You want to know how much of price to equity is, what their price to equity is. ratios that will, and here we say, before you invest in an asset class, invest in knowing and understanding that asset class. Invest in, even if it is a master class, just go and learn about it so that you don't expose yourself to losing money, hard-earned money, right? So it's not so much gut feeling, and that's why we say, if you don't have the time to monitor the market, to do the analysis, to look into the fundamentals of the company, the balance sheet, the income statement, the statement of change in cash flows. If you do not have that time and capacity, you rather have a broker who does that for you, and they give you recommendation, all right? So they tell you, this stock is a buy, and this is the reason why. The analysts have done all the job, the donkey work behind the scene, and now they just present to you to make that decision to either buy or not. They will also do analysis and tell you it is time to sell, or you just continue holding. So those are the terminologies: buy, hold, sell. And it is because they have done the research. There's a lot of research work that happens. So with equities, it's not so much of gut feeling, but research, analysis, trying to understand, to unearth information beyond what meets the eye.
Yes. Thank you for that. And I see we have questions coming in. Thank you so much everyone for dropping your questions. Please keep them coming. Let's make this session engaging. James Mburu says, amazing. Thank you, Natalie, for inviting us. It's fire. Please keep on dropping those fire emojis in the comment section. SCNC, please tell us your full name. Watching from Machakos. Thank you so much for joining. Godfrey has a question here. He's asking, are SACCO shares part of equities?
Wow, they could be considered as equity, but now they are not traded in the stock market. All right?
Yes.
All right,
yes,
so even as we will go ahead, they'll also pay you dividend, like the equity market, right? And basically, you are owning a part of that SACCO.
Yes.
Right, you're giving them capital that they are lending to other people, and the interest they're getting from that, they also share it with you as basically an owner of the SACCO.
Yes, and usually as you save in a SACCO, most, is it all or most that you have to also buy shares in the SACCO as well?
They require that because then how are we going to lend?
Yes.
Because the SACCO really, and the reason why people, the objective, purpose-driven investing. So when you get into a SACCO, you get into a SACCO with the view of borrowing. You want to also borrow. So if you want to borrow, I'll need you to also have your stake in the game.
True.
So basically, they'll require you to put in a bit of your money, all right? And then after which we will be sharing whatever we make out of the profits in terms of interest. Yes.
Thank you. Another question here from Edwin Amolo. Thank you, Edwin, for your question. He asks, what are the conditions to invest in fixed income? Is anyone allowed? Is there a minimum amount to invest?
Yes, you'll need to have a CDC account, and that you can open in any of the central bank branches. Yes. So there's a form that you'll need to fill in your KYC, attach a few documentation, and they'll open for you an account. Minimum investment is it's 100,000, but now I know there's also 50,000. So with 50,000 you can buy fixed income instrument. That is a bond, right? A bond, right? Yes, largely, and then anyone can invest in the bond market. There are no restriction.
Okay, awesome. Another question from Godfrey again. Can someone be a member of more than one SACCO?
Yes, you're free to join as many SACCOs as you can.
No
limitation. Just to do your due diligence that you're in a good environment.
I think Mumbi asked a question that you might have answered here. When investing in government bond, you mentioned a person needs to open an account with the central bank. What are the requirements? I think you just said KYC.
Yeah, KYC. Passport photo. And they'll need you to sign the original, and then you present it to them. They'll open for you that account. And yes, you're free to start transacting.
You said
CDC.
CDC.
Yes.
Is it the one charging people membership fees right now? I've been seeing a trending topic on Twitter where we have very many dormant accounts, and people are like, so that they can, I don't know where that decision came from, but they've started charging people a small monthly membership fee. Is it a membership fee or account fee?
Just to keep the accounts running, really. And then we also have CDSC, right?
Okay.
So this one is for your equity, for you to trade in the capital market, the equity stock market, you'll need this kind of account.
Yeah.
And I believe probably this is one we are referring to.
Yes.
And basically because they manage your buying and your selling. So basically if it is dormant and then it basically the investors are not doing their thing. And if investors are not doing their thing, so basically the markets tend to stagnate. So we need people buying, we need people selling. And in that movement, we then see prices going up, prices going the demand and supply dynamics. Yes. Yeah.
Okay. I think as we go to the other asset classes, which ones have you invested in?
Oh, myself?
Yes.
Myself, I've invested in fixed income, the equities, because also I'm limited of time. I use a mutual fund that invests in equities. So basically, I don't have to do the work of research. So basically, that's where I put my money.
So your salad bowl already has
something. It has something.
Has some of the things that you've talked about,
We want to retire early, isn't it?
Yeah.
That's the objective.
We want to be on fire. And for Mumbi, Edwin, let us know if you've answered your question. And also let us know what in the asset classes that we've already talked about for everyone in the comment section. James Mburu, Masi, Mwendwa, please let us know what asset classes the ones that we've talked about, which ones have you already invested in? And let's get this conversation going on as Gabriel goes on now into the other asset classes that you do have.
So now we segue into alternative asset classes. So those two are called traditional asset classes. Basically, why traditional? Because that's where we all began. But now the markets are now moving and creating more asset classes for people to invest in. And the one we would begin is private equity. So you'll hear people are in private equity, and basically what they're doing is they're scouting out for smaller companies with huge potential. And then they finance them, give them the capacity, give them manpower, give them the expertise, and then they grow. Then when they grow, we sell them, make our profit. So basically, we give them seed capital. We could get in as venture capitalists. We could get in as
venture capitalism is private equity.
It's private equity.
Okay.
All right.
Okay.
So with basically, and as I was explaining, venture capitalist, you can get in as a seed. You're providing seed capital. So basically, they have an idea. They don't have the money. You give them the money to start out, and then you can come in when they are in their early stage or in their late stage, depending. So you'll hear organizations that have started off and they are raising money through venture capitalists. So basically, they themselves, they portray capacity, they have tested ideas, and then now they are floating into the market for someone to help them expand, right? So here our objective is to help that organization start out, grow, and then we have an exit plan. So in private equity, as we get in, we all have an exit plan. So most organizations will want to know, can we sell it, right? And sell it at a higher price than the one that you put, the money that you put in. That they'll want to see that you really actually have the potential. And then another level of private equity could be management buyout. So basically, this is a company that is well established, but they are really having trouble with maybe cash flow. So someone comes with money, they pump into the organization, and then the organization, they even give them expertise to change. You know, for you to change an organization, you start with the top. So they change the management, and then all of a sudden the organization start doing well, and then they plan to sell their shares, make their profit, and they go away.
Is this the pump and dumper here?
Boom. So it's bad to say that's not good for business because we as investors, we say we get in when the prices are low. We get out
when they're high.
They're high. So basically, that's the game we play.
Mumbi here says she invests in money markets. James Muru in fixed income assets. Thank you so much. Please let us know where you're putting your money in currently as we come to also come closer to finishing what these asset classes are. Let me allow Gabriel to go on.
So with private equity, they're high risk, really high risk, because the organization you're pumping in your money today with potential will actually go into the market and they're not well accepted, they fail, you lose your money, right? But then if they do well, you stand a chance to gain highly. So the organization out here with capital, and that is what basically they do. They seek out for ventures that have potential and invest in it. So if you have significant capital, then this is a place you would want to go in. But then again, most of us probably don't have that capacity.
Yes.
So this one is a pass. Number two, under alternative investing, all right? So here we also look at probably commodities and the derivative market, all right? So in the derivative market, currently we floated it, I think a year or two ago. So the NSE has capacity for you to trade financial instruments. So with financial instruments we're looking at here is forwards, your futures. These ones are a bit technical, right? Swaps, options, right? And basically they help us with risk management. So if you're in stock market, the prices can go up and down anytime. So basically you want to protect, you want to hedge your risk, hedging, right? So that I take 2 steps forward and I prevent myself from taking 3 steps backwards, right? So you could buy a forward that basically mitigates your risk or futures. And basically with forward is an agreement that at a particular point in time, you'll buy my instrument at a particular price. They all have an underlying asset. That's why they're called derivatives. They derive their value from something, right? From a certain asset. And here we were saying it could be oil, it could be gas, it could be something that really has value. And then you're getting into an agreement, you're agreeing today, but this transaction will occur in a future date, right? So then the question is, you have done your mathematics correctly, because at the later date, the price could actually be it or could be not it.
Isn't that what do you call this? It's like betting.
And gambling. Let's just call it gambling.
It's like gambling.
You're gambling. Actually investing is gambling to some extent. Okay. So all you just need to do is intelligent gambling. Like it is informed, right? So as you invest, yes, you're just taking chances. It could work out, it could not. But then again, that is the objective is it works out. But in your portfolio, yes, you need to understand that some will work out, some will not. That's why you need a bag, a mixed bag, right? So we have our derivatives, and then we have our offshore investing. So basically, you have seen opportunities that are not available in this market. You've seen that opportunity in an outside market, in Tanzania, in Uganda. You want to invest in asset classes that are not available in your locality. So basically you want to invest in such kind of avenue. The problem here is you need to be cognizant of exchange rates, because you're investing in a different country, different currency, right? If that currency depreciates, what impact will it have to you? So offshore investing, it's risky, but again, if it is in a tax heaven, you save on taxes. So you hear people, do you remember the scandal?
The paper
that So people tend to invest in those areas so that they can hide their identity, make money out of it, in tax haven, so that they save on taxes and such kind. But then again, it's risky because again, you're probably not there yourself. You're just trusting that things are happening and are happening well. If they collapse, then you also lose. You lose everything. And then the political dynamics. So the country could be exposed. If it is exposed to maybe political violence, and then they burn down your asset, basically you lose. So that kind of dynamics. And then basically, as it all comes down, we have our real estate. Well,
before you start talking about that, since I think we all know TSAVO is also in real estate, affordable, amazing apartments to be specific. Let me read more of the comments here. Betty A says she invests in circles and money market funds. Anastasia Mongangi, following from Machakos, thank you so much for joining, guys. We are talking about asset classes. If you've just joined, this recording is still going to be here on our YouTube channel, so you can pull back once this is over. But please remain on the screen so that we can go on. And Gabriel is going to be talking about real estate today. So let me let him talk about it.
Yes. So real estate is also another really interesting asset class that we all love maguta, right? Right? we all want to have a title with our names,
yes,
right?
Yes.
So
with the
property,
red stamp.
yeah, with the red stamp, right? Yeah.
Yes, yes.
So basically, with property, it's a good asset class. Why? Because you're investing in long term, and then it appreciates in value. So some of these asset class depreciate over time, but with property, it appreciates in value,
yes,
right?
Yes,
so you get, even without developing it, you can just hold it over a given duration of time, sell it, get your capital gain, and go away. The only problem with property is the illiquidity component of it. And because of the illiquidity, you can be rich, you have 50 acres. But if you are to convert that into cash, right? You are hungry, or your kid has been sent home from school and you need school fees urgently. My friend, if you are to sell 50 acres, how long will it take?
It's a whole process.
Yeah.
It's a whole process. But they never get a client.
A client.
Yes.
And most people, most marketers, they tend to look for you at that point, an advantageous point, that you're in a crisis, you need money, then they buy it at a discount. At a really discount, right? You lose.
This is what they call asset rich, cash poor.
Yes, asset rich, cash poor. So you really also want to have a bit of cash and cash equivalent assets that you can easily tap in case of such kind of emergencies. So with property, you can develop the property, right? And with developing property, then it gives you an additional income, which we will be calling rental income. And the beauty with rental income is it keeps coming. It's passive. It doesn't even require you to be there. It keeps coming. And then it keeps you going, right? And then the beauty about it is if it is kept in good structure, it can continue on for a very long time. For a very long time. So it is a long-term asset. And for retirement, because then you don't know how long God is going to keep you in this world. You want to have such kind of an asset that continues to pay you over and over. All right. So beside capital gain, you get rental yield, and rental yield is really good for each of us. And then the only downside to it is if you're investing in property, you need to be very cognizant of the law and deal with credible people, right? Because we know in this market, people sell you air. People in states or in diaspora investing in a house, they send you picture of a neighbor's house, you come back and the story is really devastating. So basically, you want to do a bit of that due diligence. And TSAVO is here to help you with that, really.
And I'd like you to tell us your journey as a TSAVO, right? And before that, I can see we have a poll here. And the question is, if you've invested, are you able to easily liquidate your assets? And I think 5 votes down, 60% of us are not able to. And 40% are able to. We have 2 questions here from David and Diana. David asked, what are the advantages of investing in real estate as compared to equity?
So advantage of investing in real estate as compared to equity. So one, real estate is less risky, all right? It's stable. The equity market is volatile. It changes day and night, And then the other benefit is the rental yield is guaranteed. You know you can project what it is. Equity, we said, it is at the discretion of management to choose when to pay you dividend and when not to pay you, right?
And you'll walk in town and see buildings written 1920. They've been earning rent since.
Ever since, right? Still paying, still running.
Diana Muiruri asked here, loving the discussion. Thank you so much, Diana, for joining in till this time. Please advise on which assets one should start off and how to navigate to diversify your asset base. Probably in brief, so that I'd like also Gabriel to tell us his story as a TSAVO, right, and why he chose to invest in TSAVO as well. Also we come to a close because I can see time is also not on our side as well. So Diana asked
how to start
and how to navigate.
So to start, have the discipline of saving, putting money aside. And the one thing I've learned lately about saving, it has to be a significant amount that then it makes you feel that you're doing something. Right? So most of the time these people are saving peanuts, right? Okay, peanuts are better than no nuts at all. But for you to achieve any milestone in life, you have to sacrifice. So start by sacrificing a significant amount of money, put it aside, have it consolidated somewhere. You could start with our mutual funds, as we've said. So put money there, parking, earns you interest. It's your emergency fund. In case of anything, you can liquidate it and use it here and there.
Yeah.
But then after you have, for example, 50,000, 100,000, you can go into the bond market and buy 1 or 2 bonds, right? And then once it's also a significant amount of money, you can get into equities, right? Put in some portfolio, just have something there. And then with real estate is capital intensive.
Yes.
It requires a little bit of a significant amount. But then if you started with the mutual fund, so like for me, I have a threshold that my equities, my money market has to be. But once it surpasses a particular threshold, I start thinking of how can I invest this excess money so that I only have my emergency fund limit, and then the excess of it, I put in a cash generating asset. Yes. So that is how you can get started. Save, put it in a money market somewhere, put it in a fixed bank account, M-Shwari locked account, and then start deploying them. You don't have to be a financial analyst to do that. You can just start deploying slowly but surely. You'll create a portfolio that will help you in retirement.
Thank you for that. So you are a TSAVO, right? You have invested in TSAVO's affordable, amazing apartments. So how did you know about TSAVO, and why did you choose to put your hard-earned money into TSAVO, and what are those features that made you say, okay, this is an asset that I would actually want to put my hard-earned money in? Yeah,
so as I said, so how I got to know about TSAVO is a very interesting journey. So as part of the introduction is I'm a lecturer, so I teach students to in this journey of being certified financial analyst, the CFA profession. So one of my students, Stella, hi, shout outs, So one of my students, we met up and just wanting to know what your students are doing. So she told me she works for this amazing organization, and what do? They invest in real estate. And as we said earlier, real estate is capital intensive, really. So you have to prepare yourself. So she pointed me in a direction. She told me about it, right? And I got really curious. She told me you can go and check out their YouTube and listen to them. If it is something that interests you, get back to me. So I went, listened in, and one of the conversation I had them Charos having is their target market is young people who are at that verge of they are starting to create some wealth, right? So most of the time is with our generation, we tend to buy cars, want to live flashy lives, right? So that money that you would use to buy a car, right? Whatever amount it is, you would actually, and she was saying, it's Emily, you could actually buy a house, right? This car, 5 years down the line, depreciates, right? In value. If you are investing in real estate, then beside it giving you rental years and rental income, and because in Nairobi here or wherever you're living, rental is a recurring cost, right? So you want to manage it. You want to manage your expenses. And one of the expenses that you want to remove in your balance sheet, right, is a recurring expense called rent, right? So if you're in a place where you're paying rent, you think of creative ways of how do I eliminate it, right? In the long run. So I have more money to invest, more money to save, more money to do the balling, right? So basically, that's how I got to know. And it interests me in the sense that the objective and the purpose that they want to achieve is to help us get financially independent, give us access to otherwise inaccessible investing. So in myself, probably it will take me a couple of years to invest in the leafy suburbs that TSAVO invests in. So with TSAVO, then I get to get my head in, right? And then from there I can grow, right? And because it's about the number, so I got in, start building a portfolio, right? Because at the end of the day, you want to create it enough, sufficient enough, so that at retirement, you're able to replace at least 70% of your income, right? 70, even you're not working, it's coming.
It's coming. Passively. Passive cash flow.
Passive cash flow.
Passive cash flow. So you still have, as much as you need to be liquid, you still need cash generating assets.
Important.
And real estate and rental income is one of these assets that are in the portfolio. And thank you so much. I can see Diana. Diana thanks you for the answer of how to navigate this thing.
Thank you.
Fidel Mwaki, one of our advocates, we were with him today. Thank you so much, Fidel, for joining in. Explore your options. Alex gives a fist bump. We can do it on his behalf.
Thank you.
Alex. And Mwendo says fixed assets. That's where he's invested in as well. Thank you so much. Just to double down a little bit more on the TSAVO affordable, amazing apartments that we have. And like he mentioned, it's a purposeful. We are a purpose-driven company. And if you have any questions about the affordable, amazing apartments, you can drop them in the comment section. I could answer them for you. But the way we've structured our business model is in a way that should be able to enable you, Gabriel, and every other TSAVO right watching in, and anybody considering to invest in real estate right now, a way that they could earn while they sleep. A way that they could earn, they could get to financial independence using affordable, amazing apartments. And we, together with a group of TSAVOites, the Charo started this business model, and it's structured in a way that we design, build, sell, and manage affordable, amazing apartments. So we design off from construction. Charo is a renowned architect, has been in practice for more than 20 years before he began TSAVO. And so we design it, we build the apartments, and as we build, we also sell. So you'll see most of our projects are off plan, and luckily, I think God has given us the favor and the faith that people trust in us, and they put their hard-earned money way before, and we do whatever it takes to ensure that we deliver these projects. And so far we've delivered 5 down the line, currently constructing 5 as well, and still going on so that we can provide more vehicles to enable you achieve financial independence. And after construction, what we do is we get to manage these units for you. We do the property management for you, so we make it passive. Gabriel says here, investing for the lazy. Or for retirement as well, you could say. But we do the property management for you. So we'll get a tenant for the house, give them a good experience as well, enable them to create a good experience in the apartments. It's been a tough market. This young us young people, it's been pretty hard to navigate, but we are actually getting our foot into it and really getting to understand it. And now you get the passive returns as an investor. And what we do encourage our investors is, if you're still earning, if you still have active income, if you still have a salary, or your business is still doing well, don't eat the eggs of your chicken. Reinvest that rental income back into real estate. And luckily for TSAVO, our payment plans, which go up to 5 years, enable you to pay even 20K and 20K, which could also be your rent. So you could reinvest your rent back to buy another house. So by the time you say, let me start eating my rent, they've already hatched and become very many chicks in the market. So I don't know if you have anything
absolutely
to add on
absolutely. It's that model for me really works. And the fact that you have a track record that can actually be seen. We are at TSAVO's apartment. So that for me was really a plus. And the fact that you go over and beyond to get income out of it, because then it's one thing to own a property, it's another for it to be an asset. You could actually have a dead land somewhere, but then you've invested your money, and then it's over a period of time. So as you wait for you to become rich and have the capacity to invest, you will wait for a very long time. You rather start small and keep growing along that path, right? And it gives you the discipline. I think that is the other thing, that then you know, I have a purpose, I have an objective, I have this to own, so I need to be committed. I need to sacrifice, cut some few things here and there.
It's very hard.
It's very hard.
It's very hard. And we've talked about it in our live streams if you've watched them, and that's how it is. And to enable you start this journey of financial independence, we have fire partners at TSAVO, and these people enable you walk this journey to financial independence. They will enable you to realize why real estate could work for you, if it actually will, and also now enable you pick the right the right investment, because also when you come to affordable amazing apartments, they range, you'll get one going for 1.6, 1.8 million, up to 4.5. So where could you begin? Could you begin in cash? Could you begin in deposits? And which locations could work? But we go over and above trying to search in locations where you will get good rental income as well. So in the comment section, Sia, our moderator, if you didn't see her in the beginning, you can pull it back. She's going to be sending a link which you can follow, and we could link you up with one of our fire partners. If a fire partner invited you, like I can see James, it was James Muru was invited by Natalie. Please go and speak with Natalie. Ask her how she could help you begin this journey now using TSAVO as an investment. And it doesn't mean you need to have the 1.8 million. Luckily, like you said, start small, and along the journey you will grow with it. Yeah, because you don't have to wait to get rich.
Yes.
Yeah, and TSAVO enables you to start from as low as 380 Gs, and even further, we have something called TSAVO Saves, where you could start saving here and there, and once it gets to the percentage, 20% of a unit, you could now select a certain unit and still go on with the payment plan. So start small, start wherever you are, begin with what you have. So please follow the link. We will link you up with one of our fire partners. They will be able to walk you through this journey, and that's how we work here at TSAVO. We want to take you to financial independence. So follow the link. If you have one, please put them to task. Let them enable you select the right units here at TSAVO. Let them enable you select the right locations here at TSAVO. And as we come to a close, thank you so much, Gabriel, for all the insights. I believe we've all learned a lot, and if you've learned as much as I have, please just drop Gabriel a thank you here. It's been very awesome. He's taught us very well, and we've really gotten to understand all these asset classes. Where we could begin, Diana herself has really learned a lot. Thank you so much, everyone, for joining. Thank you, Diana. Thank you, Fidel. Thank you, Alex and James, Betty, and everyone else who's joined in. As we come to a close, you know the weekend is almost here.
Absolutely, a few hours away.
A few hours away, actually. And you know what happens during the weekend? You'll find yourself endlessly scrolling in Netflix. Trying to select a certain movie. So we decided today to have a segue where we can recommend a movie. And I think from the team, if you didn't see them, please go back to the beginning. We recommended 2 movies. And if you've watched one of these, I think we'll put them in the poll, and you can get to select which one you've watched before and which one you think people should watch or you could recommend. And then also next week, we will also get to see which one you guys love. So 2 movies. King Richard, I haven't watched that one. But there's also Silverstone Siege. This is an African movie. I have watched it. If you don't want trailers, if you don't want spoilers, sorry. It's a very good movie. It's a very good action movie. It will be worth your time. It will be worth your time. And we'd like to play a few trailers here and there. Let's see. We can play a certain trailer. And James here says, thank you, looking forward for more. So let's play the trailers of this movie. Please drop if you've loved the session today. Let us know in the comment section. Thank Gabriel here for teaching us today, and here are the trailers for the movie.